Picture the London skyline at night, the lights of the city glowing against the dark sky, and the Thames reflecting the pulse of global finance. Billions of pounds move through this small district every single day, connecting Britain to the world. But behind this modern financial powerhouse stand three old surnames that shaped every corner of British economic life: Barings, Rothschilds, and Barclays. These families financed wars and empires, built railways and canals, rescued governments during crises, and brought everyday banking to ordinary British people. They created the foundations of the system we live in today. In this video, for British Economic Archives, we explore how these families quietly built modern Britain, how their money shaped the country's rise, and why their legacy is still all around us. Stay with me to the end, because once you understand what they built, you will never see a British bank, a pound note, or even an ATM machine the same way again. To understand their impact, we travel back to a very different London. In the late 1600s and early 1700s, the city was transforming from a crowded trading port into something far more powerful, a financial capital unlike anything the world had seen. At the time, goldsmiths kept people's coins and valuables in secure vaults. Over time, they began lending money, writing receipts, and creating early credit systems. From these humble workshops grew the first London banks. Barclays started on Lombard Street in 1690, when two Quaker goldsmith bankers began offering loans and storing deposits. Decades later, through marriage and partnership, the Barclay name joined the business. Meanwhile, Britain had just created the Bank of England, a central bank designed to help the government borrow money efficiently. With private family banks growing on one side and a central bank rising on the other, London developed a financial engine capable of funding global trade, industrial expansion, and the rise of the British Empire. But the early financial world was not clean or moral by modern standards. Both Barings and Barclays accumulated early wealth through the Atlantic slave economy, directly or indirectly linked to plantations, shipping, and trade networks built on forced labor. The profits from sugar, tobacco, and cotton poured into London, giving these families the capital to expand their operations. With these resources, they could lend to governments, invest in global trade routes, and take on projects ordinary merchants could not dream of. It's important to recognize this part of the story, because British finance grew not only from innovation and vision, but also from exploitation and human suffering. Yet, those profits helped build the foundations of the banking system that would later define modern Britain. When we talk about today's financial powerhouses, we are also talking about money that began in the Caribbean, crossed the Atlantic, and ended up in counting houses along streets that still exist today. Out of this world rose Barings, one of the most powerful merchant banks in history. Founded in 1762, Barings quickly grew by financing massive international projects. By the early 1800s, the bank was so influential that one European statesman reportedly said there were 6 great powers in the world: Britain, France, Prussia, Austria, Russia, and Barings. The bank arranged the Louisiana Purchase, the land deal that doubled the size of the United States. It financed governments during wartime, including the young United States during its conflict with Britain. Barings became a bridge between nations, channeling money across continents, supporting trade routes, and financing the expansion of global markets. When Britain needed credit to stabilize its economy or support military campaigns, Barings was often there, acting almost like a private arm of the British state. Their influence made them central players in Britain's rise from an island kingdom to the heart of a global empire. While Barings expanded across oceans, another family was shaping Britain from the heart of London. The Rothschilds arrived in the late 1700s and built one of the most advanced financial networks the world had ever seen. Using fast couriers, coded messages, and international family branches, they transferred money across Europe at incredible speed. During the Napoleonic Wars, the Rothschilds helped move funds that supported the British war effort, becoming key partners of the British government. By the mid-1800s, their London bank was financing railways, mining companies, ports, and large-scale industrial projects. They helped countries issue bonds, managed government debts, and invested in new technologies that would shape the modern world. With their influence came titles and honors, including representation in Parliament. The Rothschilds became symbols of both enormous wealth and enormous influence, building systems that allowed Britain to industrialize faster than its rivals. At the same time, Barclays was building something equally important, but much closer to everyday life. While Barings and Rothschilds handled global finance, Barclays built a retail banking empire for ordinary British people. Over the centuries, the bank merged with dozens of smaller institutions, becoming one of Britain's most trusted high street banks. In 1967, Barclays installed the world's first cash machine in the London suburb of Enfield. This single moment changed how people interact with their money forever, allowing customers to withdraw cash at any time, long before digital banking existed. Barclays became the bank of shopkeepers, families, small businesses, and workers. It helped people buy homes, start companies, and manage savings, playing a direct role in shaping the everyday economic life of Britain. Modern Britain, with mortgages, business loans, savings accounts, and debit cards, grew from the retail financial system Barclays built. But the path to building Britain's financial empire was far from smooth. With great power came great risk. In 1890, Barings nearly collapsed after making enormous loans to Argentina, which defaulted. The bank was so interconnected with the global economy that its failure could have triggered a worldwide financial crash. Britain's central bank had to step in to organize a rescue, proving how influential and how vulnerable the private banking system had become. Barclays, despite its reputation for stability, later faced major controversies and regulatory pressures in the modern era. And even the Rothschilds, though known for financial brilliance, experienced cycles of struggle and reinvention. These crises remind us that the families who built Britain's banking system did not do so in a straight, victorious line. They built it through ambition, mistakes, risk-taking, and constant adaptation. Even with these ups and downs, the legacy of these families is deeply embedded in modern Britain. Barings pioneered the model of global merchant banking, connecting nations through credit. Rothschilds helped shape government, finance, infrastructure investment, and international banking networks. Barclays created the everyday system of retail banking that millions of British people still rely on. Together, they built a layered financial structure: merchant banking for global deals, investment banking for governments and industries, and retail banking for daily life. These layers form the backbone of Britain's economy today. They allow the country to borrow, invest, trade, and grow, even after centuries of political and economic change. This story is not just history, it is the blueprint of the financial world you experience every day. The debit card in your wallet, the mortgage on your home, the interest rate set by the Bank of England, the investment deals happening in Canary Wharf, all of them can be traced back to structures these families built. When modern London calls itself a global financial hub, it is standing on the foundation laid by bankers working in candlelit offices. Centuries ago, handling ledgers by hand, sending letters across oceans, and risking everything on deals that would shape nations. So the next time you walk past a bank branch, see the skyline of the City of London, or use an ATM, remember this: you're seeing the work of families whose influence stretches across centuries. Their names may appear on old buildings or historical plaques, but their systems, ideas, and networks still power the British economy today. If you found this deep dive into Britain's financial past interesting, make sure to like this video, share it with someone who enjoys stories about the hidden forces that shape our world, and subscribe to British Economic Archives for more historical investigations. Turn on notifications so you don't miss our next episode, where we uncover how Britain's most important financial decisions shaped its rise, decline, and transformation. Thanks for watching, and remember, every pound has a history.